why do so many traders end up losing money? I mean, even when they've been in really profitable positions. Well, it often goes a lot deeper than just greed or having a bad strategy. In today's explainer, we're going to break down the powerful psychological traps that lead people down a path of loss, and more importantly, how you can learn to spot them and get out of their way.
Man, this quote right here, it gets right to the absolute heart of the problem. See, so much of trading loss isn't just about being greedy, it's about this fundamental mismatch between what we want to happen and what can actually happen. This is like the first domino that just sets off a whole chain reaction of bad decisions. And that brings us right to our first section, the expectation trap. This is really where the whole psychological battle begins. And you know what? It often starts before a single trade is even placed.
Okay, this is such a crucial distinction. We love to blame greed for trading losses, right? But the real problem often starts way earlier. It's about being totally unrealistic from the get-go. Think about it. A trader with a small account sees people on social media making these huge dollar gains. They start expecting the exact same returns, not realizing that what really matters are the percentage gains. And that gap, that massive gap between the profit they desire and what their account can realistically produce, it's just a complete recipe for disaster.
So, this initial trap of unrealistic expectations, it often leads to something even more powerful. A kind of social trap that's incredibly hard to escape on your own. Let's talk about the psychology of the hive.
This is fascinating, isn't it? The source basically describes it as a form of cult psychology. I mean, when you're in a group and everyone is just chanting things like it's just getting started, this powerful fear of missing out just takes over. You do not want to be the one person who sells only to watch it go way higher. So what do? You stay. You stay as part of this hive, reinforcing each other's decisions inside a bubble of collective denial, even when you're sitting on huge profits.
And well, you know how this story ends. The market does not care about group chants or wishful thinking. So when reality finally hits and that bubble bursts, the once vocal members, they just disappear. They either leave the community totally embarrassed, or they just go silent, unable to face the same group they were once a huge part of. The hive just dissolves.
But for a lot of people, the story doesn't end there. Nope, it moves into a really destructive cycle that the source calls rinse, repeat, wreck. And this is where the real long-term damage is done.
This right here is a truly vicious loop. After a crash, instead of actually learning the lesson about risk or psychology, the trader just goes looking for the next shiny object, right? The next big hype. They find a new group, a new cult, and that whole cycle of collective denial starts all over again. They just hop from one trap to the next until, eventually, the emotional and financial toll just breaks them. And the aftermath it's pretty grim. The person isn't learning, they're just getting more and more bitter, constantly looking for someone or something to blame. It was the market's fault or some guru who wrecked them, but it's really all about avoiding the painful truth of their own repeated decisions.
So how do you break this cycle? That brings us to what is by far the hardest part, confronting the mirror. This is all about dropping the excuses and facing some really uncomfortable truths.
This lays it out perfectly. It's so easy to say, oh, those other people are just lucky. It's a lot harder to admit they probably just have more experience. It's tempting to feel like you deserve a bigger account, a bigger position size. But the truth is, significant size is something you earn. You earn it through discipline, through strategy, and through surviving your mistakes over a long period of time. It's not an entitlement.
And this is exactly why so many people get stuck. This quote just nails it. Admitting that you were wrong, that you fell for the hype, that you made a string of bad decisions, that is painful. It is so much easier on the ego to just find someone else to blame. So, the crucial point is this. Success in this game is not an accident. The people with those massive accounts, they've likely been doing this for years, maybe even a decade or two longer than you have. They have taken the hits, they have learned the hard lessons, and they have put in the time to build both their capital and their skill set.
Okay, so we've seen the traps. What's the way out? Thankfully, there is a constructive alternative. It's what our final section calls the path of patience.
This is it. This is the first and honestly the most important step. It sounds so simple, but it is so difficult to do in a world that's just flooded with social media. Your journey is your own. Comparing your chapter 1 to someone else's chapter 20 is just a guaranteed way to feel terrible and make a bunch of rash decisions.
This is the real path forward, and let me tell you, it is not glamorous. It is not a get-rich-quick scheme.
It's about focusing on your process, doing the work day in and day out, patiently, methodically growing your account over years, not weeks. If you can truly commit to that, then the market in time will reward you.
So we're going to leave you with this final critical question, and I want you to really think about it. Take a hard look at your own approach. Is it based on a repeatable, disciplined strategy that's focused on long-term growth? Or are you just chasing a feeling, chasing the excitement, the community, the hope of a quick win? The answer to that question will determine everything.